My name is Ivan, and right now you're seeing my digital clone who's recording this video for you while I'm at work. Here are the hottest news from the world of AI and cryptocurrencies. Today, we'll discuss the reasons behind the fall of Bitcoin and Ethereum, their future, and how to profit from it in 2024. We'll find out how artificial intelligence can assist you in trading, as well as BlackRock's inflation forecasts and Trump's intentions towards crypto. All the information has been personally verified by me. Let's get started. Now let's talk about the 5 reasons for Bitcoin's decline, as well as what each of them means for you and what conclusions can be drawn collectively. The first reason is the end of the race to launch spot Bitcoin ETFs in the United States. On January 10, 2024, after 13 years of waiting, the U.S. Securities and Exchange Commission approved applications from 11 companies to launch a spot exchange-traded fund, ETF, based on Bitcoin. The next day, trading with this instrument began in America. In the previous episode, I explained in detail what it is and who was able to make the most profit from it. Many participants in the crypto community adhere to the principle of buy on rumors, sell on news. The launch of the instrument became an information trigger for many to take profits. The news release relieved the tension from the market, which had been storming throughout 2023 due to fake news and rumors on this matter. Therefore, many investors shifted their attention from Bitcoin to other assets. For all of us, this means that Bitcoin ETF is an important tool for those who want to earn money on cryptocurrencies, and it's worth studying. Soon, I'll release a separate video about Bitcoin ETF and who lobbied for its approval after 13 years of bans. The second reason for the decline in Bitcoin's price is the sales of GBTC, the former Grayscale Bitcoin Trust, which the company managed to convert into a spot Bitcoin ETF. In the summer of 2023, the organization proved the illegitimacy of the SEC's refusal to consider its application for fund transformation. Since the launch of spot Bitcoin ETF trading in the US, GBTC has recorded an outflow of $3.4 billion. This is one of the news that shows how important it is to follow market undercurrents. The third reason was the acceleration of inflation in the US to 3.4% in December. The rise in inflation suggests that the Federal Reserve will not be able to reduce the key interest rate in the near future, meaning high-risk assets such as cryptocurrencies will remain unattractive to investors. You know yourself that inflation is a major reason to use crypto, at least as a small personal reserve fund. I made a separate video about this. The fourth reason is a correction after a rally. In anticipation of the approval of spot Bitcoin ETFs in the US, Bitcoin was actively rising. Positive movements often lead to corrections. During this period, investors take their profits. From a technical analysis standpoint, cooling periods are necessary for the market to gather strength for further growth. The conclusion for you is to learn to see market fluctuations not as confirmations of your fears or greed, but as successful moments for buying and selling. No price peak is a signal to buy unless you want to lose money. Instead, it will be followed by a correction or decline that will open up new opportunities. I'm preparing a separate video on how to identify these stages in the market, especially if you're a beginner. Finally, the fifth reason is that despite high trading volumes, spot Bitcoin ETFs have not fully met expectations. The highest trading volume for the instrument was recorded on the first day. Since the launch of spot Bitcoin ETF sales, the indicator has decreased by almost half. Many participants in the crypto community could be disappointed by these results. The first wave of Bitcoin decline amid the launch of spot Bitcoin ETFs likely intensified negative emotions. It is worth noting that many participants in the crypto community predicted an active influx of institutional investors into the crypto industry with the launch of this instrument. According to some forecasts, the money from large investors could support the growth of BTC and the entire market. The unfulfilled positive forecasts in the first days could have been the reason why many optimists turned away from Bitcoin. The lesson here is that during moments after the hype, the most optimistic investors are often the first to lose money and intensify the decline in value. Do not buy or sell coins based on emotions. The main conclusion from Bitcoin correction consists of 2 parts. Firstly, you should understand that there is always a so-called correction after peaks, which is a small price decrease. How long it will last, Whether the price will continue to fall or rise depends on the market situation, but it is impossible to predict it accurately. The main thing is not to buy coins at their peaks, because there is a great chance of entering a correction. Secondly, any price increase is an opportunity for those who invested in the coin at a low price. Conversely, any decrease opens up investment opportunities. The lower the price, the less faith there is in the coin, and it becomes more profitable to buy it. Of course, taking into account all other factors. I ain't talking about scam coins that you shouldn't touch with a 10-foot pole. I got an episode on that too. And pretty soon we'll break down what to do if you're a crypto newbie and need a detailed plan for 2024 to make some dough in this market. Will Bitcoin rise again? Let's talk about 5 factors that could cause Bitcoin to reach $60,000 or higher in 2024. Firstly, the recent launch of spot Bitcoin ETFs in the US significantly expanded the investor base. According to CoinShares estimates, a potential inflow of around $3 billion into the Bitcoin market may help the world's leading cryptocurrency reach the $60,000 mark. The trajectory of Bitcoin's movement is influenced by a combination of various macroeconomic factors. The most important role is played by monetary policy, what the government sets as the cost of money and credit, especially in the US. An expected reduction in interest rates by the US Federal Reserve in 2024 could enhance Bitcoin's attractiveness compared to traditional assets. The weakening attractiveness of the US dollar amid geopolitical shifts and supply chain changes further strengthens Bitcoin's position. Concerns about the sustainability of US debt also hint at a decrease in trust in the dollar, which plays into Bitcoin's hands. Inflation dynamics in developed countries, similar to trends after 2009, suggest a likely reduction in the Federal Reserve's rate. Such monetary policy easing may increase Bitcoin's attractiveness in 2024 compared to US Treasury bonds, considering BTC's fixed supply. Another factor is the strengthening correlation between Bitcoin and traditional assets, due to investors' desire for stability amid policy changes and market upheavals. It is expected that this trend will be temporary, and during 2024, Bitcoin will likely restore its characteristic inverse correlation with the US dollar. The potential of Bitcoin as an effective diversification tool beyond traditional asset classes is gaining wider recognition. In other words, investors do not want to put all their eggs in one basket and are using crypto as well. I recommend that you do the same and build your portfolio during 2024 by buying cryptocurrency, as the growth in the importance of this tool is evident. Other of my videos will help you choose the best coin and the best time to buy. Trump and cryptocurrencies. Former and possibly future US President Donald Trump spoke out against the idea of creating a digital dollar issued by the central bank, stating that he wants to protect Americans from government tyranny, Bloomberg reports. As your president, I will never allow the creation of a digital currency by the central bank, Trump declared at a pre-election rally in New Hampshire. Such a currency would give the federal government absolute control over your money. They could take your money and you wouldn't even know it's gone. Proposals for the creation of a digital currency issued by the Federal Reserve System of the United States have sparked significant criticism from conservatives, who argue that it would allow the government to track the financial activity of citizens and use its powers to prohibit the purchase of certain goods. Supporters of this idea of a digital dollar believe that its implementation will make financial transactions more efficient and simplify the detection of fraud and money laundering cases. The Federal Reserve is exploring the possibility of implementing a digital dollar, but has not yet made a decision on whether to recommend its creation. Neither the White House nor Congress have supported this initiative so far. On the other hand, cryptocurrencies are precisely the competitors of the banking system. The federal government has no control over them, which is one of the important advantages of crypto. It can be speculated that Trump's policy and desire to protect Americans from government tyranny will help reduce regulatory pressure on cryptocurrency exchanges and other players in the crypto market if he comes to power and keeps his word. And before we continue, I want to thank you for your support. For 6 months now, I have been creating content that helps people understand cryptocurrency not only as a means of earning, but also as a technology that improves our lives. I have been and will continue to hold cryptocurrency giveaways to your wallets. I also have a whole series of videos about how crypto is making the world a better place and how it can help each of us. Thank you for liking and commenting. It is very important. For example, 1 like equals another 10 views and recommendations to other viewers. Thank you once again. And now let's continue. AI helps traders make money. I regularly make videos not only about cryptocurrency, but also about artificial intelligence for 3 reasons. Firstly, AI is already changing the way we live and work, so it's better to know about the news in this field before everyone else. Secondly, I own projects in the field of AI. Even this video is recorded by my clone created by a neural network. The third reason is AI is already being used to make money on crypto. Traders now use the computational power and speed of machine learning algorithms to analyze vast volumes of data, identify new trends, hedge risks, and generate profits with high precision. AI has a multitude of tools for assessing the potential risk-reward ratio. Among such tools are position size limits, stop losses, trailing stops, and take profit orders, which trigger an automatic position closure at a predetermined price to prevent substantial losses and secure profits. Modern AI is also capable of diversifying crypto portfolios, distributing risks among a large number of altcoins, as well as hedging by opening counter positions to protect capital from losses. Backtesting is another method by which artificial intelligence verifies the viability of a strategy using historical price data to assess the level of risk under various market conditions. Many algorithmic trading platforms also conduct in-depth sentiment analysis on social platforms to identify potentially low or high-risk market opportunities. For all of us, this is a signal that it's time to learn how to work with neural networks and keep an eye out for the next ChatGPT, but with features for crypto traders, and take advantage of its benefits before others. On my channel, you'll find videos about AI in crypto and more. BlackRock's inflation forecast for 2024. BlackRock, the world's largest institutional investor owning shares in a wide range of multinational corporations worth trillions of dollars, has released their inflation forecast for this year. BlackRock experts are confident that in 2024, inflation in the United States will remain at 3%, which will directly impact financial markets, reports MarketWatch. The company attributes this trend to a deteriorating geopolitical backdrop. Geopolitical fragmentation, one of the top 5 major factors influencing markets, is increasingly evident in recent events in Asia and the Middle East. This is one of the main reasons why we are seeing persistent inflationary pressure, keeping rates above the pre-pandemic level, cites the publication from a BlackRock report. According to the company's forecast, no significant improvement is anticipated in 2024. Specifically, the firm expects a worsening in international cooperation, an increase in competition, and a strengthening of intermediary nations, including Mexico and Vietnam. This is also confirmed by BlackRock's Geopolitical Risk Index. Since the end of 2023, it has been approaching a value of 0.5. This level was also observed, for instance, during Russia's invasion of Ukraine. Let's recall that the US Federal Reserve System has set an inflation target of 2%. Only upon reaching this will the regulator consider the possibility of lowering the interest rate. This news affects not only the crypto market, but also the prices in stores. Therefore, in any case, it's clear that studying cryptocurrency to form an additional source of income is a good option to get through tough times. Caution: phishing attack. Scammers have stolen over $580,000 from unsuspecting victims in an ongoing hacking and phishing attack using the email addresses of major Web3 companies, including Cointelegraph, Wallet Connect, and Token Terminal. Criminals were forging official email addresses to send harmful links using the email service provider MailerLite, which was presumably hacked. The company confirmed that it is investigating this issue. Cryptocurrency investigator ZachXBT noted on his Telegram channel the address of a multi-chain where, since the delivery of phishing emails, stolen cryptocurrency amounting to more than $580,000 has been collected. Wallet Connect has also warned users of X, formerly Twitter, that it is aware of a phishing email asking users to click a malicious link for a giveaway. we are aware of an email that appears to have been sent from an email address associated with Wallet Connect, offering recipients to open a link to be able to request a giveaway. We can confirm that this email was not sent directly from Wallet Connect or any Wallet Connect affiliates, and that the link apparently leads to a malicious site. We are working on further investigation. While we continue to better understand the situation, we urge everyone who received this email not to interact with it at all, stated Wallet Connect on the 23rd of January 2024. Wallet Connect's Chief Operating Officer Jess Holgrave reported that malefactors used the company's real email address to send out phishing emails, and that she is also in contact with MailerLite. According to a report by cybersecurity platform Hudson Rock, its researchers discovered a copy of the CryptBot InfoStealer malware on a computer belonging to a MailerLite employee. Hudson Rock asserts that this malware could have been used to gain access to MailerLite servers, the data and capabilities of which could be used in further attacks. MailerLite has yet to respond to requests for more detailed information on how the perpetrators managed to use official email addresses. Investors should always be cautious when interacting with emails containing unexpected giveaway announcements. And that's all for today. Write what you think about what's happening and whether you believe in the growth of Bitcoin and cryptocurrencies in general. Ask your questions in the comments. See you in the next videos.